Yes, we normally go live at 7:30, and we still will. We will go live at 7:30. That will be your daily financial news for May 24th. What I wanted to try to squeeze in here in about 10 minutes is an important topic, a topic that I believe is going to surprise a lot of people. And that is the fact that the median home price in the United States will likely surprise to the upside. So what I thought we should talk about is just do one dedicated video on why the math says that this may happen. We will talk about the variables that will drive this, and then we will talk about, does it really matter? So first and foremost, in order to talk about the median home price, we must first understand the word median, or how it is used in this context. For example, we will just draw a straight line, right? Don't know if you know this, but in the United States, I believe, again, some rounding here, we did 6.9 million transactions last year, I believe. That just seems like a lot, but I think that's correct. 6.9 million housing transactions, right? And then you have Zillow or Redfin or Case-Shiller or whatever talk about median home price. Median is nothing but the middle, right? So 6.9 million house sales. If you just change this number, for example, from 6.9 to 4.8, the median is still the median, right? It's the number in the middle. So now let's talk about what is going on in the housing market today. The Fed broke housing. We have clear delineations in the market. So what I want to do here is I want to take this line, and I want you and I to kind of think about this in thirds. Actually, we'll probably do it like this. And again, I've just taken the line and kind of segmented it out because I think this is important. This is why median home price will likely surprise to the upside, and people are going to go nuts trying to explain it. So here we go. So what are these three segments? Again, it's one market, it's one line, it's one total, but bear with me. First, we have first-time home buyer homes, right? Entry-level homes. They are in all markets, but at different price points. In your market in the Midwest, maybe it's $100,000. Maybe it's $200,000. Maybe it's $300,000. Whatever it is, right? Whatever first-time home buyer is in your market, right? Then there is what is often called the move-up buyer. You buy your first home, you live in it for 8 years, you trade up. You sell one, you buy another. And then there's luxury, right? Wherever it is in your market, it's 2, 3x, whatever the median is, okay? So these are the segments. Historically speaking, this was 40% of the market. First-time home buyers were 40% of the market going back to 2020 before. This was about 35% of the market, and then that would leave 25% here. So now we're going to talk about why the median home price will skew higher and absolutely drive people crazy. First and foremost, in the last housing data that came out, we now learned that the first-time home buyer is not 40% of the market. In the last report, which is April, just 3 weeks ago, we learned that the first-time home buyer is not 40%, it is 22%. So what did we do? We took out 18% of this line. So just that one change, it automatically moves the median home price that way. But I think it gets worse from here. We are seeing a shift in the housing market right now. Right now. What else is happening? Well, this move up market. I am continually hearing from folks who are saying, you know what, Michael, you are right. Supply destruction is real. Supply destruction is real. So what is happening is they are not selling this and they are not buying this. So again, what is going to happen going forward? We are going to lose more of this first-time home buyer. And we will lose some of this move-up buyer. Now let's talk about luxury. We will undoubtedly lose some luxury sales as well. Most of luxury is bought with cash, or they have the access to write the check. But a lot of that is in the stocks. Some might have been in crypto, whatever, might have been in a business that's not doing well. So we will certainly lose some luxury. But here's the deal, right? You have heard me say all the time, and we did it earlier, right? We did 6.9 million. I think we're going to do 4.8 this year. Let's see if that's still on the screen. It is barely. So if we did 6.9 last year, we do 4.8 this year. Where do you think the 2.1 million home sales falls off? Well, I'm going to guess a lot of that is the low end. Some of that's in the middle, and maybe there's a little at the high end. So if you lose more of the low, then you lose more of the median, the middle, the move up, and only a little bit. It just means the median home price is going to go up. Now let's have the conversation about your buy box, your market. This is national stuff. National stuff is interesting. It's certainly interesting for a guy like me who looks at the big picture and tries to help people. But all real estate is local. In my world, that means buy box. You need to look at your buy box. Should you care that the national picture is going higher? The median home price could shock to the upside, and I believe will likely shock to the upside because that's how math works. Don't get it twisted. Your market, your buy box, you do the work. I believe all of you, whether you are an investor or a homeowner, your job is to get a great deal this year. I am hoping that none of my followers or subscribers pay list price this year. The last 2 years, you had to go quick. You had to do something stupid. This year, only buy great deals. Only. You should be passing on good deals. We are in winter. The next 2 years are going to be tough. Only do great deals. Yes, I do believe median home prices going up, and I believe it is irrelevant to your decisions. You do the work. You do the work. Your buy box. Figure out average. Only do great deals. If you need help with this, I'm here. We have an amazing Facebook community that can help. But again, I think a lot of people talking about a housing crash are going to be wrong. And if you are looking at Z estimates or list prices and you think prices are down 15% in 2 months, you're wrong. First off, Z estimates are not value. It's not a transaction. List price is nothing. It is transactions. If you are following people that talk about Z estimates as the sign that housing crashed 15% in 2 months, I don't know what to tell you. That is just utter nonsense. Folks, we talk about real stuff here. We are here to make money. Only do great deals. One more time, if you are a subscriber or follower, again, an investment or your first-time home, only buy great deals. More inventory is coming. Look for the motivated sellers. They are out there. All right, folks, see you in a few minutes. We will do the daily financial news. Bye-bye.